Hello and welcome to Switzer Investing Insights, brought to you by nabtrade. And today we want to talk about, is it time to buy gold and how do you do it? Paul, what's been happening with the gold price?
I always like to start by looking at the chart, Peter, to show me what's been going over the long term. Let's take the first chart, which shows you that the gold price has been going up. Hit about $2,000 in the early part of 2020, and that was pretty close to an all-time high. In fact, the highest price we'd seen over almost the last 20 years. So gold, you'd have to say, has been in a bull market. If you look at the next chart, Peter, which just sort of breaks it down to the last 12 months, you'd actually see that we've probably been coming off, in particular over the last 6 months, doing a lot of work around the US $1,800 mark. And in fact, for the last 6 months, really just trading either side in a tight range.
Yeah, and given the fear around the coronavirus and lockdowns and economic challenges, it's not a surprise to see the gold price being so elevated.
No, it's not, Peter. And there were a lot of gold bulls saying in the early part of 2020 that gold was going to go to the moon. It didn't happen, but markets never go just in one direction. So you could argue, I think, from a technical point of view, that we probably still, the uptrend is there, but in a bit of a pause phase.
Yeah, right. So let's have a look at the factors, positive and negative, that can drive the gold price.
Yeah, it's important to understand this because gold is one of those rare assets that people, has a scarcity value and also is something people turn to in crisis. But there are other factors, and if anything, these have been driving the price more recently. Of course, as a commodity that's actually used in production, it's not just used in jewelry, but it's used in certain forms of production. There is an underlying physical demand for it, so we can never ignore that some of the gold is taken out of production, is used and consumed each year in terms of jewelry and other matters. But the main factor that probably drove the price of gold up was really the what I describe as a lack of confidence in the US government and the US monetary system as central banks flooded the economy with money in response to the virus, but also government deficits across the world, and particularly in the US, just ballooned. And that led to also a weakening of the US dollar, and that was really a positive for the price of gold. Near zero interest rates too, as central banks just slashed them to zero, didn't help. We've had the pandemic. And just in the last month or two, we've had discussion around inflation. And if people get concerned about inflation, then that will no doubt be a positive for the gold price. On the negative side, well, we also had discussion around interest rates rising. It hasn't really happened, but if interest rates do go up, particularly US interest rates, that will be a negative for the gold price because that'll make things like treasury bonds a lot more attractive. A stronger US dollar is potentially a negative also for the gold price. We've seen a bit of that in the last few months or so. Is the pandemic over? Well, you can argue that. So that's been one of the factors that drove the price higher. So as the risk of the pandemic fades, that's a negative. Inflation, I mentioned that was a positive, but then the central banks have been telling us that's only transitory, so it won't really be an issue. And then, of course, when we have a bull market in the US equities market and it's been so strong, we sort of get to this risk-off type basis. And when we're on risk-off, that's actually a negative for the gold price. And that's probably why the gold price has been easing back over the last 6 months.
Okay, Paul, let's go through the easiest ways of investing in gold.
Yeah, so there are 3 easy ways to invest gold. The first of all, you can actually buy gold. Now, you can do that at places like the Perth Mint or ABC Bullion. Not hard to invest in gold. There are some costs, of course, and of course, you've got to look at how you're going to store it. Generally, that'll be in a vault. You probably want to insure it. So there's some just holding costs in actually owning gold, but you can actually own the physical commodity. The second, I think the easiest way to own gold is through an exchange-traded fund. And there are 3 exchange-traded funds listed and traded on the ASX. The first is QAU from BetaShares. That's hedged back into Australian dollars. So it'll just give you effectively take out any of the currency risk. And then the other 2 aren't hedged, but they're the major ones. The second is actually uses the ASX acronym of GOLD. So it trades on the ASX under that code. That's from ETF Securities. That's the largest at over $2 billion in size. And then there's also PM Gold from the Perth Mint, again unhedged, and that's about $0.6 billion in size. So buying an ETF, a really simple way, good liquidity, an easy way to actually invest in gold and make that a part of your portfolio. Or the third way, and the higher risk way, is actually to own shares in some of the actual gold miners.
Yeah, so let's have a look at the companies out there that dominate the gold stock space.
Yeah, I've listed on this table, Peter, the 5 major gold miners. They're listed in terms of their size of production. So, let's take the largest, Newcrest, which produces about 2.1 million ounces of gold. Also a sizable producer of copper, so it's gold and copper. Current ASX price of about $26. What's interesting, Peter, with these is they've all come off between about 30 and 50% over the last 6 months as the gold price has come down. So interesting enough, the broker targets are actually a lot higher, and these come from the major stockbrokers and their forecast prices. So in the case of Newcrest, current price of about $26, a broker target on consensus of $32, which implies upside of about 20, almost 25% if the brokers are right. And the sentiment is also very positive. That is, all the brokers have a buy on that stock. At the bottom of the table, you can see a company like St Barbara, current price around $1.80. It's got 30.9% upside according to the brokers. Not as strong a sentiment, and you can see its production. So there's certainly some value. If you're a gold bull, there's some value in the gold miners.
Yeah, without a doubt. And Paul, from my point of view, we can see that the price has come off the boil. They're still at pretty elevated levels, as your first chart shows. But I've always thought that ultimately gold is a quality asset. I must admit, I don't invest in it because I don't really understand all the factors that you pointed to. There's lots of negatives, lots of positives. But if you are going to buy gold, you want to buy it when the price is down and then be patient and wait for it to eventually spike again.
Yeah, I think that's right, Peter. I mean, I think it should be looked at as part of your portfolio. And I guess as equities go higher and higher, you could probably say that there's a bit more reason to own gold because at some stage the equities market's going to turn around. I think the other thing to consider, Peter, is how to do it. I like ETFs because they're nice and simple. If you are, a bit of a risk taker, then by all means have a look at the miners. These are much more leveraged to the gold price. So they're going to be a lot more volatile than the ETFs because they have, it just takes a small increase in the gold price and their stock prices will go a lot higher. And conversely, a small decrease in the gold price and their pressures will come on. So, for a slightly more conservative investor, perhaps through an exchange traded fund, for a risk taker, doesn't mind a bit of a thrill, then by all means have a look at some of the gold miners.
Yeah, and it's interesting, Paul. I've always liked Northern Star as a company, but your chart there actually shows that Newcrest has an exposure to copper, and I think copper is a resource of the future because it's involved in electric vehicles and batteries and things like that. It probably gives you a bit of extra diversification, and as I say, I think copper is going to be on the way up rather than on the way down. That's Switzer Investing Insights, brought to you by nabtrade. Thanks for joining us.